Hello! Happy Thursday. Welcome to Cross Country Conversations with Craig. How you doing, Craig?
Hey, Rebecca. Hey, everybody.
Doing well?
Doing well.
It's
How are you?
Thursday.
Good.
I don't know what episode we're on. We've done a lot of these so far. But today,
Very much looking forward to today because it's the end of the month and it's got me away from
are you a breather?
loan closings and all that
Few
stuff.
minutes to breathe and
Yeah.
chill. We could do some yoga. Thursdays we go to yoga.
Yoga with Craig.
Yoga with Craig. Cross Country Conversations yoga.
My wife would love that.
Oh my god, that would be fun. Anyway, that would be
I'm
fun.
just going to say the Indian style this whole presentation.
Namaste. Anyway, so today we're going to talk about different types of loans and if you're in a tricky situation, right? So explain to people what kind of different types of loans you would get if you're in a tricky situation.
Right.
I feel like we need to explain the tricky situation.
Tricky situation. So all the time we get referred to people who perhaps went to their bank and got turned down or have some kind of credit or income situation that doesn't fit the quote unquote box.
Oh.
Right? And so people come to us to try to
Like
solve
if people are like, I can't buy a house because my credit's not good.
credit. A lot of times it has to do with I have a new business or I just sold a business or I'm liquid but I don't show income on my tax returns or
Makes sense.
I just moved here from another country or I'm moving here from another country. Things that make it where it's outside the box. And I'll start with this, just a warning to listing agents. There's, on a contract, there's conventional box for lending type, and there's, FHA and VA. And any loan that's not FHA or VA defaults to conventional.
Right.
Conventional doesn't always mean conventional. And so, as a lender, when we're doing a bank statement loan or foreign national loan or portfolio loan or anything that's outside the box, that box for conventional could be checked. And if you don't call and try to find out what they're really doing and try to understand their loan, you may wind up in a situation with a really bad borrower and loan.
Tricky situation.
Right? And like really unrealistic timeframes in your deal and set the wrong expectations with your seller. And so it's a good idea to drill down the financing a little bit further than just looking at it and saying, okay, this is a conventional deal, it looks good, right? Certain questions you can ask, such as wanting to see their DU or calling the loan officer and asking how they're structuring the loan.
DU.
The desktop underwriter. It's an automated approval on a
Gotcha.
conventional loan. So, disclaimer, just wanted to show you that. Sometimes listing agents will send me offers to look at and say, which one do you think is the best? And you can't always tell just from looking at it. You got to dig in a little bit further.
Makes sense.
But I digress.
Okay.
So, one of the biggest things that we deal with on our side is income-related creativity, if you will. People come to us, they say they are self-employed, or perhaps they got turned down at their bank because they weren't showing enough income, and they certainly have the assets, or maybe they have good cash flows but really good accounting. And so the waterfall that we usually go down always is first try to see if there's a way that we can make the loan work to be a conventional loan. Because a lot of times we just know our guidelines better, or we know how to manipulate our guidelines better to make a deal fit that may not otherwise. Like sometimes we can get away with 1 year tax returns versus 2, or sometimes we can maybe get a little less expensive insurance to make a deal work, or add a cosigner, things like that. I usually try all of those things before going to a non-conventional product.
So this is like Plan B is non-conventional.
I call it Plan E.
Oh.
Because as a lender, a lot of lenders advertise these types of non-conventional programs just to get realtors to call them. But not a lot of those deals get closed. Like lenders that specialize in that stuff aren't really lenders that you want to deal with regularly. We use it as a total Hail Mary last resort.
Last resort.
Totally, yeah. We're always trying to get people
What
to fit.
one of those advertisements look like so people can keep it
Um,
out?
Loans down, bank statement products, foreign national products, assets in lieu of income, anything that is an alternative type of loan that comes at a higher rate and or cost to the client
Mm-hmm.
is what I'm specifically talking about. There are good asset-based loans through conventional when you're like a very high net worth client with good credit. Those fit in the box. But if you're doing a bank statement type loan, and what that means is sometimes self-employed people, in lieu of showing their tax returns, will show 12 months of bank statements, and you take an average of their cash flows in lieu of income.
Okay.
Right? So those are creative and they're awesome. And sometimes they will fill a need, but they are punitive to the buyer's interest rate. They solve a problem, and so there's a need for them, but we generally try to get people to fit in the box versus just going to one of those.
Right.
Okay. So if a buyer's aware of what they're doing and they want the house, that's what you do. You don't start there. Okay. Bank statement programs generally will require at least 10% down, sometimes as much as 20 or 25, depending on the credit score. I think I've said this before. You look at credit, income, assets, and usually when one of them is maybe not so good, if the other two are good, you can figure out a way to work.
Right.
If someone's high net worth with good credit, not a lot of income, it works. If someone has so on and so forth. So that bank statement loan is good for people who have good cash flow, maybe a nice down payment, good credit. Okay, that's one. Another one would be sometimes when people are buying for investment, you can use the projected cash flow of the new place as income.
Oh, that's cool.
So you go to buy investment property, maybe you don't show enough income on your tax returns, carry another property, put it down 20, 25%. An appraiser says that that place you're looking to buy would rent for $4,000. You get credit for 75% of that $4,000 as income. And so
even if you don't have a tenant in place?
Even if you don't have a tenant in place. It's just based on market rent. So like if the total housing payment is going to be $3,000 in that example, 75% of $4,000, it's pretty much neutral on their qualifying, right? So we're able to we're able to solve some problems with that. I mean, we may do a handful of those a year, but you got to know the product so that you can solve it. What's up, Mr. How you doing, man? Good to see you. I'll come back to you, man.
Hey.
Yeah, so you got to know that product because there's going to be a time when it comes in. And you just think of it, and you're able to use that to help someone solve a need. Foreign nationals, there's programs where, asset-based lending. Let me do that one. So when people have high net worth, we have quite a few different options for them where even if they're not showing income, if it's retirement or if someone has a high net worth, usually you can either divide it by 360 payments as income. So if someone has $5 million, you can take the $5 million divided by 360, and that's the income you give somebody. There's another lender we use that just takes a percentage of the assets as income. So basically, if someone's high net worth, you can find banks want to make those loans because they're very low rate of default. You get into a little trickier situation where someone maybe doesn't have that much money. And you're also not relying on income. You need to have something to hang your hat on as a lender, right? So if someone's putting down a bigger down payment, generally there's a way to get that done. Now, foreign national lending means someone who is from another country buying here. Okay, now, interestingly, if someone already lives here, even if they haven't established much U.S. credit, if they're here legally, there's ways to get people loans that aren't priced as foreign nationals. In this area, there's a lot of foreign buyers. And so we find ways to get people into more conventional products if we can. I just had one right now, a guy's from Europe, and he was told by another place he had to have a 6% interest rate foreign national loan. He's been here 5 months. He's here legally on a work visa. He's got U.S. credit. It's not great, but he's got it. And I was able to get it approved for a conventional mortgage.
Does
30-year
credit
fixed.
in other countries, like, do they have credit
They do.
the way we do?
Kind of, sort of. Like there's countries in Europe that have a credit system. A lot of those foreign national deals, instead of having an international credit report, we'll get a letter from a CPA, we'll get some banking references, it's a little more of a common sense approach
Yeah,
than running a credit report.
gotcha.
A little different.
That's interesting.
Yeah, so there's usually a solution. I always tell people if we can't find a way to get something in the house, it's just not happening. Like
Yeah,
there's so many different products out there.
yeah,
But I guess the point of the whole conversation is there's a lot of different things we can try before we go to one of those products. So if
do you deal with like hard money people? Is
I
that
don't-
something that's a
we-
back?
so
Last minute.
hard money is for someone that needs to close really quickly, doesn't want to show anything. Maybe they're buying a home that's in disrepair,
Mhm.
it's dilapidated, it won't pass an appraisal. I mean, I know people that'll make loans to people. Again, I don't market that. I might do one or two
That
a
would be
year.
like considered another like last resort.
Yeah,
in most
because
cases.
we don't broker those. I just pass them to someone that does them.
Gotcha.
I don't get in the way. And that's a solution for one or two people a year.
Yeah.
You know, we've got it up our sleeve if we need it. There's a lot of other things we can do besides hard money. There's just alternative lending,
Right.
like a non-conventional product that's not quite hard money. It's not quite
Like what we're
conventional.
talking about.
Yeah.
Yeah, that's
So
interesting.
generally, you know, we take on a deal and we look to fit it in the box.
Doesn't fit in the box.
Then we move on to maybe an Alt-A non-conventional product. Last resort would be a hard money loan. Like,
Gotcha.
most of the time, people have already lost interest in wanting to buy before they go
Before
there.
they go to hard money.
Yeah.
Go to the uncle down the street.
Right.
Cool. No, that's really good to know for anybody that's like,
So we do all those things.
Yeah.
You may not get marketing from me that says we do because, quite frankly, I'm not looking to have 50 of those going at one time.
right.
But of course, we have those products.
Yeah.
You know, and of course we use them, but it's not our it's not our first choice, and it's because it's not the best for the clients.
Gotcha.
Yeah.
And Craig, you will also be at our listing mastermind on August 24th.
I will.
Look up. So if you have anyone questions about all these mortgage questions,
Mhm.
he'll be there. August 24th from 4 to 6 at the Polo Club.
We'll be there.
It's really cool. I'm
Cool.
really excited.
Good.
Cool. Anything else you gotta tell people?
That's it right now. Wish me luck till the end of the month, and I'll be seeing you guys again soon.
Bye, people.